Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, where we look at technical analysis charts and try to understand what happened in the market and try to learn something from it and plan for a better trade for the next day. That's December 22nd, Friday, tomorrow, 2023. If you're not subscribed, please subscribe and share to friends and colleagues so that it reaches out to next. Thank you. Here we have a quick market wrap up, and before we get into that, let's straight away dive into the charts. Here we have the Nifty charts. Right, here we have the Nifty charts and the Bank Nifty charts there. Look at that, look at that plane. Look at that candles. No? Wide range bullish candle that happened after a dip and a quick reversal. Bank Nifty also. Wide bullish candle that happened after a dip. So it trapped the bears. The bears were hoping for at least to go to the 20 exponential moving average on both indices because it was close by. At least that was good, but market was much over that, trapping completely the bears. The bears hope that it can go further down. So that's how market behaves. So it did a quick correction, less than 3% now from the top on both indices, and then it just quickly recovered and bounced. Is that a dead cat bounce or not? Will come tomorrow if the price moves about to the candle's high. There's no other way to tell that, but there is a probability that it can break out and make new highs if the price moves about today's candle high. And the CIB bounds continue. CIB bounds is where the market halts at a previous resistance zone, which is now acting as support, and then bounces from there. And the continuation of CIB bounds is possible. So it was yesterday. It was a bulls that got trapped when the price moves above and made new all-time high, and then dipped, engulfing all three candles. Today it was a bears that got trapped basically. So otherwise, market is still at the very top, very top, where the Fibonacci extension also 78.6 is reached, and trendline channel is also on the top. The correction was due, absolute correction was due. 3 days it's trying to move up, didn't happen, and made the big correction when the US market also did the same yesterday. I know immediately it bounced, but days were buying today actually, right? So that's what happened. So market highs and lows, if you try to see the first hurdle would be to take out the 21,600, 21,591, that zone where the all-time high was made previously, and after that 21,700 and towards 22k. That's how it goes. It's an unknown territory because Fibonacci extension that's used for projecting also is over. So 8.6, and then right, it can go up like anything. And then charted territories in the support downside. First one will come at 20 exponential moving average. Before that we have Fibonacci 23 retracement levels and Fibonacci extension 61.8. Both can act as a support zone. It's at 21,000 nearby. Today market breached the 21k and went to much further, right? 170 points down and then 270 points up. That's a kind of up move. No, there's a kind of trading that happened today in the Nifty and the Bank Nifty. Today was a Nifty expiry, remember that. So first support will come in, that is 20,950. 21,000 and 20,950, that zone, the confluence of these two Fibonacci levels, and then after that the major support will come in 2700, which is a gap, as well as the Fibonacci 20 exponential moving average is coming in 2800 nearby zones. So 2700 to 2800 would be a very good support, and if that is breached, it goes to 2550, which is where the 38 retracement and the 50 extension levels are coming in. So 2500 will come as a major support downside if that gap is closed, right? Similar to Bank Nifty, the first one hurdle on the upside will be 48,000 rounding number, and then 48,219, that is the all-time highs, and then 48,500, and likewise for till 49,000. It's resistance on the upside, it's unknown territory. It is also on the top of the channel and above the Fibonacci extension levels 78.3. Downside, the first support will come in at 46,800, 700. That is the confluence of 20 exponential moving average. The gap is coming at 46,500, and the 23 Fibonacci retracement is coming at 47,770. So those are the supports on the downside. If the gap at the 46, the 20 exponential moving average is 46,600 and 46,500 gap. If that is closed, then it can come to 45,900 and 46,000 rounding number. That's level supports. Right, that's what I look at. Let's just come up and wrap up. So big action, gap down opening and reversal, trapping the bears. Final closing to plus 50, ran 5 points up, and then wide range green bullish candle is what you can see, and it managed to close yesterday 21,150. Today it's 21. 250, and remember it's 26% rally from the bottom, and it's only 3% correction. Even from the previous unit, it's 13% up more than happening. Bank Nifty also closed positive. Wide as green scan, bearish scan, less than 1% of up move, 395 points up. Both are very close to the trend line channel, very close to all-time highs. Today's managed to close above 48,800, and a similar 25% mid of a rally. CIP pounds worked out well. That's what happened more than license today. Intraday, it was, as I said, it's a gap down and then reversal. 170 points and 250 points of reversal. No, one of gap down on Nifty and Bank Nifty respectively, and 288 and 905 points of reversal from the bottom. Right, big reversal is what has happened. Right? So who is responsible for it? It was DA. It's not other Fyers. Fyers are selling 1,600 crores in the cash market, while DAs are buying 1,500. Yesterday also this FIs which was selling, FIs are selling since the last 4 days, but the last 4 weeks, week to week basis, FIs were big buys. But last 4 days they're continuously selling, but now seems to be buying big. Yesterday also 4,000 plus. Also buying happened from the lowest issues. Mutual fund money is flowing, and that's what they're making it in the market. That's what is happening. Levels we already seen in rotating that. Bullish momentum is there. Maintained on both indices, no doubt about that. And it's not falling, it's rising today. Right. So if you see the momentum, just quickly go there. Yeah, its momentum is not falling, both the momentum is rising. It's a mistake there. And let me correct that straight away. Right, it's bullish momentum rising, and one more thing you notice is that its bullish momentum has got a divergence also. It's a positive reverse divergence, bullish nature. And divergence, if you want to know more about divergence, just check out the playlist, the technical analysis playlist. We have what is for different types of divergence that can happen. So that's again bullish in nature. So absolutely no problem with the trend and the momentum. Trend also ADX indicator issues. That's also not post over, and it is still in the bullish momentum, right? It's still in the bullish zones, DMI positive, with respect to the trend. So trend and momentum observed bullish, no doubt about that. Now comes the India VIX. India VIX was behaving quite big spike came when the market gap down. It went up to 15 and then cooled off. So finally, net to net, day-to-day basis, it's nearly 5% close cool off. So cool off has been because the correction is coming every day. The fear was because of the market. The fear of height is what is the market was at the top, and then that was a fear that is reflected in India VIX. So VIX spiked up 15, and then there is probability that it can move further up. So it is slowly shifting from the very low 10 plus kind of low vol regime, and then slowly moving into medium vol range or high vol range. So once it has close about the 20, you have to be cautious. 15 is good for the option sellers basically. So in IV percentile and IV and implied volatility and realized volatility spread difference is in the mid range of nearly 50, 30, 50, 30, 40, 50%. That is what is seen in the favor of option sellers even now. Right. So Bollinger Bands, if you see it is contraction in the sideways, so we will see that that Bollinger Band contraction has begun, right? It has taken a bend on both indices, and that means that market is going to be sideways. Here it is not fully bent, but small bend has happened. Again, it is that bend is straightened out. So try to watch for a couple of days where this flattening is happening. Also, flattening can straighten out to be a expansion once again, then it's upside. But as of now, small beginning of a consolidation sideways started, you can say. That's all. No confirmation, but technical results is extremely bullish, and vertical moves and small corrections compared to the big moves. Small correction is very close to the all-time high. Very close. Nothing has happened. It just went down and recorded. So the correction is only less than 3%, so anything would happen. More questions coming, or the bounce will continue and then surprise everyone. So the second time or third time, and then this is the third time. The Fed rate hike, Fed rate post dovish news breakout, and now previous to that, the election results outcome breakout. So this could be a third one. It's possible, right? You cannot rule out that considering the big buying from DIs that happened today. So across major industry sectors, if it's all green, it's bullish, auto and the pharma, right? This looks sideways, except this or green. Or the momentum bullishness also. Right? Reality did well, metal did well, they all did 1%. There is a depositive reverse divergence, which is bullish in nature. Is potential, not confirmed. It's seen in both indices. in all the indices which are not inside this. For the bullish sectors other than the auto firm, they all have this divergence theme, which is indicating that there could be a bounce of money that can happen potentially. Industry heavyweights, if you see ACC and FI, except that two all close green today. And momentum wise, if you see, it's a bullish momentum except the ICC and ITC. The others are all in the bullish momentum. It's really not from this. US market corrected yesterday to 1%. That red is seen there, it's on the top number. That's the same thing that reflected in our markets also. The dollar is falling slightly, rupees remaining weak and spiking up. So that's what it is. Crude oil is falling. Remember, it has fallen down below 70 and now it's somewhere in that range, 70 and 75. Gold is spiking up after hitting all-time high. It is not ready to fall. With the top consolidating. So this is time for value investing in case more corrections come in. Momentum investing in case it is breaking out again. And more time to stock purchases a quality good stocks only residing more for value or momentum. Right. The trade direction is very clear, but you have to be extremely cautious because it's a period of deciding whether this consolidation goes into a breakout or consolidation goes into a breakdown. So anything will happen. We watch the levels properly. Carefully tight stop. You'll have to play whether you're playing stocks, derivatives, whatever. So there's cut short portion size. Big slow regime has hit 15. It is spiking to 20, then cut short portion size. Play it carefully. That's all. Managing risk is all we have. So tomorrow we have the mid cap Nifty expiry. Levels that is shown to is 10,300 and 10,000. Right, by the highest call and put right, you can see. Right. Call is at 10,300, so that's a range, 300-point range. Normally mid cap does not move that much in a day. If you sell the calls at that, calls and puts at that, it should work out. It's not bullish actually. Medcap has not broken out just like the other indices. So there is a possibility that it can break out also, but Brokerage is not bullish enough. It has to be +1. It is not having. It's still not bullish enough. Neither is bearish. So that's what it is. And futures Y is not showing anything actually. I'm not aware of that. I don't have it data for it. Yeah, so keep watch on that. Mid-cap Nifty is happening tomorrow because there's a triangle week next week, right? That's what. So always manage your positions and then manage your risk. Position size and risk is all in your hands. Otherwise, market is still bullish. A small correction came in as expected because it is at the very top of a vertical move, and that small correction was quickly, reverse and market went back to where it was very close to all-time high. Once again, whether it will continue or not, so always look at the candles low. If you have bearish view, look for the candles high, if you have bullish view. That's all you can do at this time. Right? Otherwise, market is direction is very clear, absolutely. That's all I have for today. Happy trading, happy learning, happy investing. If you're not subscribed, please subscribe and share to your friends and colleagues. Bye bye.